it will be very interesting to see how this evolves. I think that Circle has a big head start in stablecoin adoption. So it'll be interesting to see if they're able to leverage that to get into financial market infrastructure. Obviously, the Senate just passed the Genius Act, and I think it's likely that the House passes their Stable Act, and this whole thing gets signed into law this summer. And if that happens, it creates a very special status for stablecoin issuers, especially if stablecoin issuers get access to at least the standing repo facility at the Fed. I think that people will look at them and say, you know, that's probably a better credit than even a JP Morgan tokenized dollar. But certainly then, you know, the long tail of bank dollars.
How is DRW adapting to the challenges of 24/7 trading?
We've been in the crypto markets since 2014, and the crypto markets have been 24/7 the whole time. So 24/7 is not a new thing for us. I think the big question is going to be, what are the options that these clearinghouses give for moving collateral, and you know, that will be a big driver of how we have to adapt.
Are you a proponent of the tokenization of collateral?
For sure. I think that if you move to 24/7 markets and you don't have the ability to move collateral or variation margin 24/7 and instantaneously, you inject significant additional risk into the financial system. So I think that it's essential, and it needs to go hand in hand with that evolution.
What was learned from the SEC dropping the enforcement case against Cumberland DRW?
Gary Gensler sued us when he ran the CFTC. They lost badly. The judge said it's not illegal to be smarter than your counterparties. That made the CFTC look horrible. And he sued us again for failure to register. We tried to register. There was no way to register. We set up a broker-dealer, and we went and said, we want to register. And they said, you can't. So we haven't learned anything. All we've learned is that bad regulators are very costly to the markets, to market participants, and to the United States. And we just need to do better.
How do you leverage blockchain and AI while complying with regulatory requirements?
Benefits that market participants are seeing from AI are really in improving coding efficiency. But there's certainly, these tools are amazing at scanning large amounts of information and summarizing things. And so obviously that's super useful. There are some people who have raised concerns about AI-driven decision-making and trading causing some kind of a market dislocation. This sounds very familiar to all the hoopla about, high-frequency trading and algorithms causing some kind of a market meltdown. I mean, this is the same thing. You have to screen this stuff through regular risk tools and make sure that you follow the regular rules and use the traditional methods for catching bad behavior. So I don't think it really changes anything. As far as blockchain, as I said, I think that leveraging blockchain for collateral mobility and eventually for variation margin, for doing intraday repo, eventually, tokenizing treasuries, tokenizing equities. It opens up all sorts of possibilities of greater efficiency. You need to do it in a thoughtful way. And I think that some people are taking the approach of, a broker-dealer buys a treasury, issues a tokenized treasury, and says, here you go, trade this around. That's not a tokenized treasury. That's an IOU. you're taking credit risk to that broker-dealer. So, that's not a good solution. You need these things to be tokenized in a very native manner. And I think that the market will get there.
How is DRW applying digital asset insights to other asset classes?
Eventually, if you have tokenized treasuries and you can, at any point in time, do a repo and transform that treasury into a stablecoin, and then you can move that stablecoin, post it as collateral, or move it as variation margin. That type of thing, creating that variation margin collateral mobility is something that's a key part of how you have to operate a digital asset business. That's the big opportunity and big learning as we get these digital rails in place.
How do you see the growth of ETFs influencing the future of derivatives markets?
ETFs have been on a tear. I think that the next evolution is going to be leveraging tokenization to create more customized ETFs, to create ETFs on the fly. And of course, now there's talk about another effort at single stock futures and creating additional products for retail investors to interact with on a much more kind of frequent basis. So this landscape is going to evolve quickly, and I think that these new technologies are going to create all sorts of possibilities.
How is DRW responding to the trend of vertical integration in finance?
I wouldn't say this is a new trend. The cryptocurrency space, there's a ton of vertical integration, and some of these firms simultaneously provide marketplaces, custody, brokerage services, and the list goes on and on. That approach increases systemic risk. I think the separation of these different functions creates more transparency. It's easier for regulators to see what's going on. And so, I do think that market participants prefer somewhat more separation in these functions. But we'll kind of see how things evolve.
What are the most significant opportunities and challenges for global trading firms?
I always say that markets are Darwinian and are constantly becoming more efficient. And if a trading firm isn't able to stay ahead of that curve, then they become less relevant over time. Their market share shrinks and they kind of go away. So that's not a new challenge. That's a ongoing challenge. On the other hand, there's this proliferation of products and I think convergence of different parts of the landscape that are happening and are going to happen, and those are all exciting opportunities for firms like DRW.